Good morning, good afternoon, and good evening, and welcome to the Bull versus Bear webinar. Steve Miley on the call here for Trade Day. Welcome, everyone. We're going to go through our usual regular run through in here today. Before I get to that, this is the Thursday, the 17th of November webinar. The Friday webinar, okay? Friday's webinar. Hope you can all hear me. Friday's webinar will be 1 hour earlier, okay? So Friday's webinar will be 1 hour earlier. So usually, what you guys in the US? What time is it now? You're Eastern. You're 7:30, right? Eastern. Is it 7:30 Eastern now? 12:30, 7:30 Eastern, right? Yeah. It will be at 8:30 Eastern. Sorry, 6:30 Eastern. I'm afraid, right? You're 7:30 Eastern right now. Yeah. It's going to be at 6:30 Eastern, and for that, you guys on Central Time, it's going to be at 5:30. You're obviously going to be able to pick up the recording anyway. Just won't be able to be on live, unfortunately, if it's a little bit early for you. So my apologies for that. So that for those of you in the UK, that will be at 11:30 a.m. UK GMT. For most of you in Europe, you're 1 hour ahead, so that will be at 12:30 now. So 1 hour earlier, the webinar tomorrow. I'm going to put it in the chat as well. 1 hour earlier start tomorrow for Friday's webinar. Okay, and I'm going to put that into the chat activity as well. We'll put that and I'll post that everywhere so everyone knows. So please do bear that in mind for tomorrow. Okay, you can always catch the recording anyway, which is situated where you see the live streaming event anyway. Okay, so it's not the end of the world if you don't get on. Okay, 1 hour earlier for Friday's webinar on Friday the 18th of November. Okay. With all that being said, let's push on. We'll go through our usual run through here today. Calendar, what we've had, what we've got coming up. We'll take a look at the macro fundamental events that are impacting markets right here, right now. And we'll also take a look at the charts and see where the potential trigger points are for today. So here's the calendar. This is kind of a bit of news in here that's important, but it's not really significantly impacted markets thus far. So we have the autumn forecast statement. This is the one that they delayed. This is what that got them into all the problems in the UK. Okay, so there's basically like the budget, this kind of thing. Okay, so setting the budget in here. And the autumn forecast statement, the market's actually taking it relatively well so far. The pound is down on the back of that, but not drastically so. So market's actually taking this activity fairly well. Obviously, the risk could have been markets have taken it very badly, like they did the previous statement, which ended up we lost the chancellor and then we lost the prime minister, etc. And the pound went into free fall, etc. Yields surged higher in the UK. The pound, yes, the pound is down in here this morning, but not massively significantly. The pound's down like 0.6, but the euro's down against the dollar. It's mostly dollar strength. The Australian dollar's down a whole percent in here today. So we're seeing broader dollar strength. So it's not really necessary fully to do with the pound in here. In fact, anything for today, the pound is only just very minimally down versus the euro. So you can see that it's not really had a significant impact thus far. And if we go and take a look at what's gone on in here, bond market has actually gone lower, the gilt market. So gilt market gone lower in price. So price is down, yields up. So again, not particularly great, but I mean, not a huge move in here, to be quite honest, not a big move on yields in the UK. So the impact has been fairly tame in here on that autumn forecast. We will cover that. I'll go through that in some articles we've got coming up. We have had Eurozone as a whole CPI in here this morning. Slightly, if anything in here, slightly better than expected, even though that's in red. Remember, that's lower than the anticipated. So lower inflation is obviously better in here as opposed to higher. So 10.7 expected, 10.6 the year-on-year number coming in line. On the core, the CPI headline number slightly better, the month-on-month in line with expectations. Looking ahead, the data's fairly light. We've got 55 minutes time, building permits, housing starts, never a big mover, initial jobless claims as well. Probably more important are the Fed members we've got speaking through today. So we do have Bowman speaking, Mester speaking, and if we go to 5 things to start your day, they do have a few others in here speaking. So they have Bullard speaking at 8 a.m. We have Bowman, we mentioned that. Mester, we mentioned that. Jefferson and Kashkari all speaking later today. We've already mentioned Hunt speaking. Let's just run through 5 things to start your day whilst we're here. So kind of know this is like really, kind of old news, even though, declared now as Republicans want a narrow House majority. It's only a slim, not a decisive election result, really. For them, they were expecting more, but nevertheless, it's kind of, it was already built into the market. We already knew this was coming. We already knew this has happened. So market effect negligible in here. This is just really a news story regarding, nothing's going to impact us that significantly. So investment giants combined 2.3 trillion assets are bracing for a challenging 2023. Yeah, I mean, great. Yeah, we know that, right? So nothing huge there. Crypto fallout continues. So we're getting a contagion effect continuing. A couple of other exchanges and crypto players, Gemini and Genesis, 2 separate companies there, under pressure in here. So a lawsuit was filed in here just recently, overnight, over the last 24 hours in Florida, naming as defendants some celebrities, Tom Brady, etc., named in that lawsuit, Shaquille O'Neal. Futures are slightly down in here overnight this morning, just from slightly hawkish tone that we got coming out from Fed speakers. And if we go to Wall Street, the reason we were down yesterday, this was the primary driver of the market dipping yesterday, and it has continued that dip through to this morning. Down after Target outlook wasn't great. The outlook from Target wasn't set that good and wasn't that positive. So the Target's down outlook weighs on retailers and pulled the broader market in quite of a slow news day yesterday. Reuters morning bid in here, bear hunt they're going for, focusing on the autumn statement from the UK. That's come and gone now as I say, and nothing really, no significant impact from we see in here from Forex Live. This is a good site, guys. I don't usually show you this one that much, but this is a good site. I'll share the article in here. The pound's down on the back of that, but if you go to Forex Live in here, so the pound down with that. This is like streaming news service. These are a bunch of independent guys, ex-traders, ex-research analysts, give you all sorts of stuff, news, technical analysis. They give you, and I know it says Forex Live, but they cover all asset classes. I mean, there is a focus on FX, but they do cover, they're looking at stock indices, they're looking at bond markets as well. So they're looking at commodities. So they're covering pretty much everything in there. So it's a good little site. Yeah, streaming news, rumors in there as well, all sorts of stuff. It complements what we have from Live Squawk as well, that you get that streaming news coming through in the trading room, in our trading room. What else were they looking on the morning bid in here as well? Talking about ECB. I mean, nothing really massive in here. And then looking ahead to today's data and the Fed speakers. So nothing we haven't covered there already. Futures slightly lower as investors assess mixed economic data. Nothing really there. Here's an article. Actually, I will share this one, a little bit more details in here from a very reliable source from the Financial Times in the UK, FT on, if you're interested to read more about what we've got in here coming through on this autumn statement. But as I say, the market it hasn't had the big negative effect we had previously. You can also see here, look, they're streaming it live on Bloomberg. If you want to go and click through there on Bloomberg, and you can watch it there. But I think it's actually over with now. If it's not, it's getting very close to the end. Pound whipsaws UK unveils fiscal plan. US yield curve inverts by largest degree in 4 decades. That's kind of weird. The fact that it's already inverted, there's all the various parts of the curve have long inverted in here. But the fact that it's the largest inversion for 4 decades is obviously significant in here. And US futures forwards Fed officials dampen pivot hopes. There have been hopes, but if we go and look at the Fed tools saying that this is creeping higher to the current, so this is creeping higher. So we're kind of starting to nail on this for only 50 basis points at the next height. But if we go further out to the peak stays where it was, so still at 475, 450, middle of June, July next year, 475, 450, and by November in here we're at 450, 475. So certainly September it's still 475, 450. So expecting a cut in about a year's time at the November meeting. That's what the curve is pricing in. Right, what else have I got in here for you? US futures, we've already gone there. Oil is dropped on demand concerns. I think this is fitting a story, but China's COVID cases climb. JP Morgan sees mild US recession, and WTI futures fall after declining further on Wednesday. It's definitely a negative day yesterday, and looking looking like more ominous, like a topping pattern. We cover that in the daily reports on my daily technical analysis reports. You can go and take a look at that. European stocks lower as well this morning. UK's Hunt, okay, we've already spoken about this. There's an entity putting on a bigger energy windfall tax, extending it to power firms, so that's kind of a positive. JP Morgan predicting a mild US recession. So we've had various predictions of from the big central banks, the big investment banks more recently, some saying US won't quite make recession, saying mild recession. So it seems like the Fed are kind of doing their job if they can get inflation under control and only go into a mild recession or a very soft hard landing, or a hard soft landing, whichever way you want to look at it. In here, so the Fed seem to be doing their job. More in the Europe, we are looking for potential recession next year. And then just looking what we've got going on today, Europe in here only marginally lower, so the FTSE's down 0.5%, the French index down 0.7, but the CAC is unchanged. The DAX is unchanged, excuse me. The German index going into today, but a little bit more hit here. We did sell off yesterday with that target news, and lower again in this day, about 0.6 lower across the Dow, S&P and NASDAQ going into this morning. Right. Let's go through the charts. I think the sell-off, though, from yesterday, not as significant. You can see here on the S&P as what we've done this morning. So we were kind of clinging on to, on the reports written last night, clinging on to a positive tone. But the fact that we've taken out the supports in here, we've lined up supports from the last 4 trading sessions. Market's been in consolidation mode. You've taken those out now. Now, I think it's going to be interesting to see what happens. So now you've got this topping pattern. It looks to me like a head and shoulders. You could argue it's a 1, 2, 3, 4, 5 point top, or a 6-point top in here. 1, 2, 3, 4, 5, and even this one over here, 6-point top. Or you could look at it as a multi-shouldered 1, 2, 3 shoulders over here, 1, 2 shoulders, maybe 3 shoulders here, 1, 2, 3 here. So multi-shouldered, and there's the head, that spike there, and then even no matter where you draw the trend line, right, it's going to have been broken. Right? If you draw it across here, no matter where you draw that trend line. Whoops, didn't like that. Let's see if I can redraw that, but it's probably, I can. It's going to allow me to use it. But, you draw it across here, wherever you draw it across in here, it's broken. You can see it really works well in here if we draw it through here. Draw it through here, kind of holds here, flirts with it yesterday, it fails. And then look, you got what we call the return move. The market broke. You see the breaks the neckline, goes back, tests the neckline and fails. So that looks very negative in here. It needs to get back above, really minimally, I'd say back above the neckline, which that's taking us back up to like 39, somewhere between 39.60, 39.70 up there now. I think it minimally needs to get back up there. The high there on that little swing is, where's that little swing high? 39.67.5. It probably needs a millimeter to get above there to set this more positive going into the day. Otherwise, you're probably selling strength in here now. Where's the downside threat? Come across, we've wiped all of this out. Targets down here now, 39.03 to kind of 38.94 area, maybe as deep as 38.72. So potentially going down into there, going into today. On the NASDAQ, not quite as negative, but we have taken out these lows, hasn't taken out this low over here yet. So if we go to the NASDAQ in here, you've still got this kind of topping pattern. It really needs to wipe out that one as well. But nevertheless, you've still got the same thing going on with the neckline. You probably argue that draws across here, flirting with that again. You kind of broke. I think minimally needs to be back through this kind of area here, back above 11,700, 710, maybe even as high as 11,750. So that kind of area there, 11,710 or maybe 11,750 to ease the negativity. It looks more bearish, obviously, below the current low for today, which is 656.5. Through this low, it looks really negative. And that low there is 569. And then again, that could push us down into here to like the sub 11,400. That's going to be really the big trigger point on the downside there. 569.25, as I say, back above really 700, 710, 720. Maybe 750 even on the top side. For the NASDAQ, let's take a look at gold and oil. Oil first of all. So oil in here been this big broader range really between here and here. So we've been kind of in this broader range from like 94 to kind of 81 in here. With this, if you ignore this kind of head on this inverse head and shoulders, didn't really get motoring after it broke this neckline here. Couldn't get above this kind of higher neckline here. And now you've got kind of definitely a more negative tone breaking down through the lows from the last couple of days into this heading, this shoulder pattern in here from the inverse end and shoulders. I think there's real risk for oil to push down into this shoulder pattern. So towards 82.40, maybe 81.20, down into that kind of area there. And if we go onto the 15-minute, it's breaking down through all the supports here, break, held in here, did hold for a while. Now we've broken through that low there and these lows here. And now you can see the market rebounding and failing, from where it basically broke down through. So again, if you've got this kind of tenuous line coming across here, you can see the market now using the underside of that line as resistance. So, really, I would minimally need to get back above 84.32 to aim it back to these like 85, 30, 40 kind of area up here. But for me, all the risk is down in here for oil. And as I say, back down towards the supports we have in here, which are going to be towards 82.5 and then like 81.30 kind of area on the downside for oil, maybe even deeper than that. So that's all looking quite negative. Gold, relatively resilient. If you think like the correlation is a positive correlation with stocks in here, with not seeing the setback. Yesterday an inside pattern. Yes, we've taken out a bit of support, but if you want to buy something, if they stay with that risk on theme, gold you would say is not taking out the supports in here at the moment. So I'm a bit kind of no strong view in here. If you want to buy something, if you want to take that risk on view, which is bullish gold is at the moment, this is probably the best way to express it in here at the moment. I know you guys probably stick to what you trade, but this one in here holding in relatively better. We've had a rebound, it's creating a double bottom potentially here. I think it really needs to clear that trend line though, back above like 1771.72, and then ultimately back above there, which is 1774.7 for a double bottom. If it takes out the lows, then it could easily be down into here to 1755. The lows are racked up around 1764, so down through the lows opens up 1755. Okay, I'm going to wrap it up there. I'm going to remind you guys tomorrow, website 1 hour earlier tomorrow. So whatever time you usually come on, it's an hour earlier, or you can just catch us on the recording. And I'm going to wish you all a great trading day until then. And have a good one. Take care. Stay safe. Bye.